Welcome back to Market Pulse. Today we're joined by Mindy Yajko, Head of US Power Sales at Marex. We'll be looking at US power markets through the key themes driving price action and positioning right now. AI and data center load growth, evolving weather conditions with El Nino building, structural gas dynamics versus global benchmarks, and how grid constraints and infrastructure are shaping regional pricing and volatility. Mindy, thanks so much for joining us. My first question is, how are you currently characterizing US power market conditions? What's actually driving price action and client focus right now?
In general, natural gas and weather are sort of the short term volatility drivers. But I think we're seeing a more fundamental structural shift. I think in the past, we've always seen, mild load growth coupled with new generation that can keep pace. And now, with the increased load forecasts for AI and data center demand, and the uncertainty around new generation timelines, it's really adding stress to the grid
Hmm.
and potentially what's ahead.
Hmm.
So I think we're seeing customers focus more on long-term procurement strategies.
Hmm.
We're seeing a lot more M&A activity in the space, and I think conversations have shifted from just balancing cost to balancing cost, reliability, and risk.
AI and data center demand has become a dominant structural theme. Where is that showing up most clearly today in load growth, forward curves, or regional basis moves?
I think in general, AI and data center demand is showing up everywhere. I would say primarily in load forecasts. Something like half of the world's data center demand is within the US, and half of that demand is within PJM. We saw about 220 gigawatts in the interconnection queue for PJM, and about, I think, two-thirds of that is expected to be gas generation.
Mhm.
And then we're seeing supply chain issues within that gas generation. And so it really makes the timeline for new generation to come online sort of uncertain, and how utilities and ISOs are grappling with how best to meet that demand, which is, expected to be at least a decade long sort of change in thoughts and strategies for the utilities and the ISOs.
And if we're to pivot to weather, El Nino conditions are expected to develop over the coming months. How are traders thinking about that setup into summer and beyond? And what does it mean for volatility and pricing risk?
Weather remains the number one driver of short term volatility in the power markets. Sort of as we saw in January with Weather Storm Fern, we saw reduced production of natural gas. At the same time, we saw accelerating heating demand,
Hmm.
which then, coupled with 20 gigawatts of outages in PJM,
Hmm.
caused market disruption
Hmm.
on the short term. In general, I think traders don't look specifically at the label of the weather, but they
Hmm.
look at all of the weather events and how that compounds with tight supply and demand. And that is what really impacts the market more than anything.
Natural gas remains the key marginal driver of US power pricing. How are you viewing Henry Hub versus global benchmarks like TTF and JKM? And does that divergence still anchor US power fundamentals?
Henry Hub still remains the primary marginal fuel for US power markets. Henry Hub prices it as a discount primarily to TTF and JKM, because Henry Hub is really the North American production, and it's affected by storage and power burn, and even LNG exports to some extent. However, I would say that Henry Hub is more insulated more than I would say isolated. So Henry Hub really remains the primary driver for power markets because it is what is utilized for economic dispatch of the stack, and also for forecasts.
And lastly, where are you seeing the most interesting dislocations or opportunities in US power markets right now?
So I do think, as we talked about, that infrastructure shift from um, high growth for data center and even
Hmm.
electrification of vehicles, to the potential development of assets that are lagging, and how ISOs and utilities are struggling with that. I think, The way that we look at it is a megawatt in one location isn't necessarily the same value as a megawatt in another
Mhm.
location, primarily due to transmission constraints or capacity constrained areas. So I think it's going to be more specific location than just a regional.
Mhm.
Um, and what consumers or clients seem to be talking about more is who can help them with this complex market
Mhm.
dynamic and potentially come with solutions rather than add additional risk to their
Mhm.
book.
Yeah, sure. Thank you, Mindy.
Thanks, Venus.